All right, welcome to the followmetrades.com Bull Traders Club live session on Wednesday, April 5th, 2023. Market's been open for a half an hour. Let's see what's going on here. Oh, we got some green, got some red. Dow Jones up 0.35, S&P 500 off a few ticks, 0.04%, NASDAQ down about 0.5%. The headline, S&P 500 falls slightly as traders weigh signs of a weakening job market. Well, here's the report. Yesterday we had the JOLTS job openings come in lower than expected. Now ADP non-farm employment change came in this morning. Forecast was 208,000, came in, wow, low, 145. Tomorrow we get the challenger job cuts, and then Friday, the official government employment change number. So, the job market has held up the economy pretty well. Kind of a good news, bad news thing. The Fed's trying to fight inflation, hot job market, drives up wages, more spending power, all that stuff. So a little bit of weakening in the employment, it looks like. And again, Friday is the big official report, but the ADP report typically gives a good read on the direction, since they process payroll for a huge portion of the country. So that's where we're at. Okay, a little bit of a mixed picture. And that's really the news for now. In terms of the broad economy, employment, and when we kick off earnings middle of the month, starting with some of the early companies, Fastenal, Alcoa, a few others, and then we're into earnings season, and there's starting to be some rumbling. See if the headline is still here yet. Numbers need to come down, the bears say, ahead of the next round of earnings report. So some folks forecasting some weakness in earnings in the latest round. All right, let's look at the chart. That's the backdrop. Now let's look at the reality. S&P 500 daily chart. Here's the SPY ETF. We've been talking about this move up starting back early March. High, higher, low, high, higher, low, high. And as it's broken out of these wedge formations each time to the upside or the downside, been pretty good setup. Broke out of this latest one, pretty good run up. We got some prior highs coming up. We're pulling back off just a little bit, but this is a strong move. And when we zoom out and look at the big picture, right? Big run up, perfect correction into the Fibonacci retracement zone, and now looks like wave 5 is starting, and maybe onto new highs eventually. That will take time. That's not going to happen overnight. That's the technical analysis, kind of what makes sense. But if earnings come in, that could delay that thing. If earnings come in weak, could delay. But we'll see. That's kind of the backdrop right now. The S&P 500 at the moment is down 0.21%. And I was looking in terms of day trading the S&P 500, if you're interested in that. Here's my day trading chart setup. Over here is the 10-minute chart. And let's zoom out on that. We always want the big picture. Okay, so you can see over last week and early this week, pretty good run up over 3 or 4 days here on the S&P 500. Yesterday was a pullback, kind of an ideal correction. Let's measure that one. Well, we're going to go from here to here, right into the correction zone, Fibonacci retracement between 38.2, 61.8. And now it looks like it's starting to consolidate and kind of want to head up. So that could happen today. You want to watch for that. It's not really there yet. So now that we've seen the big picture, let's drill into current price action. What we're looking for is kind of a convincing setup that the market's going to head up. We got a high, and then it pulled down. Now it's down. It starts taking out this high area here, right? Intraday, that could be a sign for bullish move to come. And then, of course, on our range charts, we look for the actual setup. Complete training on that's in the day trading boot camp. But yeah, if we start taking out those higher levels, we look at the big picture. It could be, coming back from yesterday's correction. You got to let that get set up. Can't just trade based on the fact that it could happen. You wait for it to start happening and prove that it's going to happen. So that is the kind of market overall view. Let's go ahead and wrap that part up.